What is up, everybody? Logan here again with another video, joined by Halcyon Trader again. You guys have been loving him, and we want to touch on some more broad market perspective ideas like we did the last couple of episodes that we've done together. So I'm really excited for this one. And, you know, in the last couple, we talked about looking towards market crashes and watching investors, especially institutional investors, take risk off or place more risk on, so you can kind of get a feel for how aggressive you should play as well. But I'm really excited to chat today with you, Halcyon. How have you been doing, my man?
Doing well. Yeah, doing pretty good. So took a little time off last week. Nice to see some nice green today on our positions, and like I said, we'll just keep on grinding.
PayPal.
So one of the things I think, as we keep getting real long in the tooth on this current run we've been on, is to keep bringing perspective into what the market's doing and looking for when do we see divergences taking place, no matter what you're viewing it through. So we talked last time, one of my favorite ways to look at the risk side of it is by viewing what the institutional bond world is doing. And you can go back and look at that video, and we talk about that in length as to kind of what's happening and how to utilize it, et cetera, et cetera. This, however, is a way to zoom directly into the equities and look for a divergence of what price is doing in comparison to what the actual issues are doing, which is an interesting way to get a little more under the hood, because it is not uncommon to see price continue to drift, even though the underlying or the underpinnings of the index or the various elements of the market are deteriorating below the surface, and you don't necessarily see all of those details when you're just looking at price only. So what we're looking at here is a bit of not unique, maybe a little unique, because not a lot of platforms let you do it this way, or I'm not aware of how they work on other platforms. But back to handy dandy stock charts again, and we're looking at, and you can do this with the NASDAQ or NYSE or whatever other index you want to view it through, but I'm looking through the NASDAQ here, and we're seeing a divergence that's taking place as it relates to the price of what the NASDAQ's been up to and what the shares are doing overall. So how you view that here is we are taking a look at right now. This is the NASDAQ advanced decline issues. So essentially what's happening is this graph normally looks like this. And we're going to remove the cumulative and just call it candlesticks. And typically, when you look at an advanced decline issues, you see a bunch of this madness, right? Looks so cool, right? Amazing. Look at all that information. What the hell do you do with that? Who knows? Anyways, but however, you take this information and you smooth it out to a cumulative, it gives you a whole different perspective as to what's going on. All right, so then we'll update that, look at the same thing. And now we see a very, very different pattern and picture showing up with what's happening in the NASDAQ. In particular, what I wanted to point out to you, which this generally is what is the precursor to having any kind of normal pullback take place, which I think we're probably getting pretty due for that, is this action that's going on up here right now. So if you notice, as I'm highlighting this is from almost basically the beginning of 2021 to where we are right now. We've been seeing a divergence taking place with what's happening with the shares versus what's going on with the price. So if you notice on the advanced decline shares, and all this is literally is taking for every advancing share, they minus a declining share. So if there's 1 for 1, it says 0. But if you're, say, there's 1 advancing and 10 declining, well, now you're -9. And that's how this line will either go up or go down. And what you look for is what pattern or trend is generally happening here. And we can definitely see there's a pretty visual trend going this way, yet on price, we're going this way. Okay. And so what typically ends up happening is this is a classic distribution that's taking place where the NASDAQ is having shares that are shuffling more to the negative side, but the price cap of the bigger stocks are keeping it up while this is taking place underneath the surface. Eventually, though, this will break down and it will pull. You'll see the price get pulled back down here. And so when we talk about hedging, these are some of these little cues that you look for. in particular, if you look at really recently here, I mean, that's a lot of downward movement of the shares that are being sold versus being purchased. And we're still, clinging to all-time highs. Again, the point is, the big thing that I want you to just take away from this is that it's not to run for the hills and, go completely bearish on the market and buy a bunch of puts. Is to be aware that this is starting to take place. We're seeing this happening a little bit on the risk reward profile, and we're also seeing it taking place now on the NASDAQ. And it does, to an extent, it's doing the same thing on the New York Stock Exchange as well. We're seeing a similar kind of toppy looking process that's taking place. How long it takes before it actually rolls over, you just have to go back and historically look at that. But I'm definitely seeing the process that's building up here. And so the way I manage into something like this is I'll put an order out there. In this case was a broken wing butterfly on the NASDAQ side of things, which was priced at a price that I was never going to be able to get filled at when I initially looked at it, but it had to have pushed up to near where it was. And I actually got filled this morning. So that if it does pull back from these highs, I'm going to get paid pretty well for that happening. And it's a pretty inexpensive hedge overall. Now, again, the grand scheme of things is, the trend is your friend, so you keep going with it. But, you have to keep paying attention to these little alarms that are going off, which advanced decline going down while price is going up. Most of the time, how this resolves is that price ends up getting pulled back with the advanced decline. So it's if you go historically and back historically on all of this, you'll see plenty of times where this does this over and over again, and it precedes most of the major declines that we see taking place. So an example would be take a look at 2020, right? Here's actually, let's see, turn this on quick. You can see it better this way, uninspected. So here's the peaking of advanced decline. Now, this is not nearly as much of a heads up as you would have liked, but here's the peaking of the advanced decline on January of 2020. And then you can see we again officially peaked here, but this is a pretty big distribution difference between the highs of where this one was and where this one was, right?
100%.
And then you see obviously it falls down. Same thing will end up happening if you go back in time and go further. I mean, you can look at this chart from a long ways back. If you want to go back to like 2000 and whatever, 2000 actually, I think you can go back that far and view this. You'll see this happening. I mean, it was really, really obvious in 2007, 2008 when the big market decline happened at that time. This was a very, very clear pattern moving down. I think it peaked in August of 07. But price kept rocketing up from that point, and then eventually got pulled down and got absolutely smashed. So, we just want to pay attention to this. Maybe it resolves itself and figures itself out in the next couple of weeks here. But if this keeps drifting down, I'm going to keep adding more hedges to protect my portfolio, because this will resolve the downside if this keeps drifting to the lower end of this. That's just what happens. So just got to be a heads up on that. So if you want to duplicate this, if somebody wants to take a look at this and explore some, interesting ways to maybe utilize this in their own trading or whatever else they're up to, the symbol is just $NAAD. That's for the NASDAQ. If you want to look at the NYSE version, it's the NYAD. And again, I like to use this when I'm looking at anything that's more tech or financials oriented, tech, financial, healthcare oriented. Obviously, the NYSE is including everything, but zooming in a little bit, that's the way you do it. So there you go. That's one of the interesting ways to start paying attention to. Again, just another one of those little, flags to watch as the markets keep doing this drifting to all-time highs without having any meaningful pullbacks. So
yeah, and that's one thing I've realized lately too. Seeing the NASDAQ continue to push higher, right, and break. I think it broke 15,000 this week, if I'm correct.
Yeah, it's currently at 14,942.
Yeah, it's just been ripping, right? New all-time highs, and to see the volume, or at least the distribution, come out of it, and to see no response at all to that is really interesting. Like, we pulled back maybe 100, 200 points on the $15,000 underlying. So I don't know. That's a lot of volume coming out of it for not see more of a pullback. So I agree, though. I think we're kind of getting into that point where the market's going to, and I don't want to be someone who's like trying to predict this stuff, because it's nearly impossible to get it exactly at the top, right? Like everybody tries to do, and then buy right at the bottom. But I think we're just gearing up for a little bit more, kind of like IWM and RUT have done, right? Where
Yeah.
it
Yeah.
got up to, I think IWM was up to 232. I don't know exactly where it is today, but I think it's still in that 210, 220 range. I think it'll just kind of do what RUT does, where it'll start to consolidate for the year and head sideways. So, which is my favorite market conditions personally, because I trade options and I like my condors and my credit spreads. So I actually prefer like what we've had over the last month and a half or so.
Yeah. It's been a good month.
It's just, yeah, it's a good month, and a couple more things that I think right now are just too expensive to purchase. But who knows? Maybe Google will just keep going up when everything else comes down. Too good of a
Well,
company.
that's really, I mean, you look at the big caps, that's them, Microsoft, Apple, Amazon, those are really what have held up this market for as long. And it will, I mean, it's going to crack and it's going to break and it will have a big decline at some point here.
Mm-hmm.
It's just a matter of
When?
when.
Yep.
And we're not putting this out here because we're trying to say this is happening next week. That's not all we're saying. It's just this, we're giving you some tools to start refining and paying attention to, because guess what? The markets don't always go up and they don't always go sideways. They don't always go down either. So there's right, they have different personalities and you need to be
Yep.
prepared to manage those when the shift happens. And so the best time to do that is not after it's happened and after you got your head ripped off. It's to be prepared to look to see in the history, how does this normally go? What does it look like? How does a bear market typically act? What does a topping process look like? What does a distribution process look like? You know, I mean, it's, again, we can have all the trading tools in the world, but it's taking the time and doing the hard work to look back at everything and seeing how it all, you know, repeats itself and being prepared for when that ends up happening. I mean, because you are being naive if you think that it's just going to continue like this indefinitely, you know, and what we've experienced the last year and a half is just what the market does, because that's not true at all. And, you know, we'll see what it is in a year from now, but that's not how it normally goes.
What was it priced at back in, I guess you'd have to scroll down a little bit, right at the bottom of the market crash. It was at 67.50.
Yeah, look at
It,
that run.
that is,
68-ish range, somewhere around there.
oh
On
my God.
March, whatever this was, March 23rd, 68.51-ish.
And it's so bizarre to think like I would be freaked out if I saw us go back down to that, you know? But
Well,
it
that'd
was
be an absolutely hell of a decline.
like people's heads would just get ripped off.
Now the thing is, like, you know, even this own the 18 into the end of 18 decline, which is right here,
Yep.
this is pretty healthy decline. That was a roughly 8,000 to 6,000, which 2,000 plus points is
Yeah.
pretty healthy decline, but it did
Absolutely.
it over about a 3 month period of time. Then we all of a sudden are now going to these things where which even then 3 months for that much was pretty intense. You go back, you know, 4 or 5 years and it takes 6 months to do that. And then you
Yep.
go back, you know, 7, 8, 9 years, and then it was taking 2 years to do that. Now we're at this space where the hyper trading that exists is you'll do this in 2 to 3 weeks. You'll go down 30 to 40%. And that's the thing that we now, it's the new style of hedging that we have to be aware of, is now we're in this space that at any given moment you can be and fall into the process of it's going to drop 40% in 3 weeks.
Yep.
Great for those who can be nimble to be ready to take advantage of that. I'm not even talking about like advantage of the downside of it. I mean, yeah, great if you can grab it, but even just to not get your head ripped off in that process so that you can go back in and look for the signals to buy on the other end of it. It's refining your tools, because, you know, the way computer trading works nowadays, we have never as traders experienced it the way it is now. Like, this is how much just technology is aiding us and sometimes distracting us in this process. But you know, it'll be a whole new wave of skills to master as we go through the next real bear market. I
Oh,
know they definitely,
absolutely.
I mean, they consider this the bear market, but that honestly, that was a quick correction blip, and it's a true bear market that lasts a while. And, you know, we haven't had one of those in, man, it's been a decade, more longer than that. Shit, it's
It's
been
been forever. It's
2008. Yeah.
we literally haven't seen a decent sized pullback since the entire market crash. Like
Yeah. I
I
mean,
just remember even like seeing February pull back into early March. Like even seeing that, like it felt bad for most people. So I remember even like people like, oh, now we're negative on the year, like at the bottom of early March. And I
Yeah,
was like, oh my gosh, you guys are ridiculous. We have pulled back like nothing compared to, I mean, we're higher than we were in September, October, November, December.
yeah, yeah.
And like, gosh, it's just crazy. I can't believe it's already the end of August though. What a trading year it's been already.
Yeah, it's amazing how quickly one that it goes, and two when you get zoomed into the looking at positions that expire week over week,
Yeah.
how easy it is to just zoom in so fast to that, and then be like, oh, now it's November. Here we go.
Crazy.
Yeah, man. It's again, like I said, it's just the point here is, you know, get yourself prepared, understand, do the study now, so that eventually, whether that's 6 months, a year, 2 years from now, whenever our real bear markets start, that you're ready to manage through them, and you understand, when the personality shifts, how the trading style needs to shift, what kind of techniques you want to go after and try, and utilize, to take advantage of that. I mean, now is the time to get prepared for that, and become, at least have as best of a heads up as you can get. Review what '08 was like into '09, review what 2011, 2012 looked like, watch the 2018 into 2019 end of the year. In fact, you can use think back on toss and just replay that period of time. Go back to roughly, I'd say start around sometime in August of 2018,
Mm-hmm.
and play it on 10x, but watch how the market's reacting, and pay attention to the positions you would have looked at that time, and would there have been indications that you would have noticed, or things that you would have switched to, or when would you have gotten bearish, when did you start hedging, just because it's going to happen the same way when we eventually decline here. And just you got to get yourself prepared to be ready for that. So
Yep.
the
Absolutely.
same thing on the bottom when we got to near the very end of December of 2018 and it started turning around, what are you looking at to help give you the indication it's time to get long again or get aggressive again? So
I
there you
remember
go.
that too. A lot had to do with the government shutdown at the time. For
Yeah, I
like
feel
that
like
big
government
decline
shuts
in
down.
December.
We shut down every
What?
other year. It feels like it shuts down like every other year. It's always some kind of political, like, we're going to shut everything down and all these kids are going to be out in the streets with nothing but
Like,
butternut
you
bread.
guys better. Oh, I know it's crazy. Like, oh,
They don't give us
extend government
more money.
shutdown 1 week. I'm like, what?
Yeah.
Yeah, I remember. I
Right.
remember that, and I remember that was what caused a lot of the December 2018 decline. Was just the government shutting down. There was so much fear in the air then, and like especially with the new year coming around, and you know how people are. Like, it's just like when year 2000 happened, and people were like, "It's the clocks aren't gonna change. The world's gonna end."
Well, they didn't change and the world didn't. So you're right. Bummer.
Bummer.
It was a bummer. That sucked. Yeah.
That sucks. That sucks.
There goes all my money.
In the world. Okay. All right. Well, I appreciate you coming back on for another video. I had a lot of fun with it. I'm glad we got to show a bunch of people. I'm gonna go hang out with Jabba the rest of the day.
That's
He's
cool.
been pretty
Yeah.
nice today.
He's a good
So,
dude.
yeah, he's a really nice dude. It's kind of crazy. We're plotting. We're just plotting
Yeah. You guys look like you're
some ideas.
kniving over there.
Yeah, movie 10. Come back. Jabba the Hutt.
Fantastic. All right.
All right. Well, thanks for coming on again, man. If you guys have yet to leave a like on the video, do it now. Also, comment something below for Halcyon and leave a
Yeah. Fine. How
subscribe.
about you send them over to me finally, and I'll actually answer one of them.
Send them over.
I mean, whatever the most ridiculous question is, let's do that. The most ridiculous.
Yeah, if you get,
put your best, most crazy, ridiculous question in there. It doesn't even have to be anything related to this.
yeah, it
And
could
we'll
just be
answer on one of
anything.
just randomly answer whatever that is.
Yeah, just whatever you guys want. Just any question.
That comment section to be out of control in the house. Like,
Yeah, I better be. I'm waiting.
we get 4 people responding. How much was
Just-
a gallon of milk in 1997?
Just chaos. How do I date a woman?
What's a female?
Just chaos. All right. Well, I appreciate you coming back on, man.
All right, no problem, man. We'll see you.
All right. See you, man.